Hey, good morning, it's Owen Bigland. This is the Inside Edge video blog. Vancouver sales plummet 39%. That was the headline a couple of weeks ago in the Vancouver Sun. Yeah, those numbers just came out from the real estate board last month for January, and they are down 39% January 2017 compared to January 2016. Sales from December to January were down about 11%. Not surprising. I was setting you guys up for that last month, saying that the sales numbers are going to continue to be dismal here. Sales volume, this is number of sales, not prices. So, which can sometimes get construed in the media and for people that are posting on some of these websites, the Vancouver Sun and the Province, sometimes they mix up sales with prices, and there's a big difference there. Sales volume is down huge. Prices, though, when it comes to condos, which is what the majority of people are buying, condos and townhomes, the last stat I saw, the prices were down less than 1%. Now, detached market, that's a different story. They're down anywhere from 5 to 8 to 10%. So, but sales volume is down. Now, the whole reason that the sales are down is because the inventory is down. There just isn't a lot of homes to sell. I've done lots of blogs on that as well. But I wanted to address a few things here. You know, it's funny with the media sometimes that, you know, don't let the facts get in the way of a good headline. And the media loves to do that. Sales plummet 39%. And it makes for good headline. And people pick up on it and think this is the big one, and the prices are going to come down. And maybe eventually, well, they will. Prices will eventually come down, folks, on Vancouver condos. I've been saying it all along. Markets don't go up in a continuous line like this forever. Eventually, they peter out. They start to tread water, which they have been doing actually for about the last 5 months, and then eventually they'll take a correction. But they could take a breather, play possum for a while, and then shoot back up again. We don't know. But eventually, all good markets like this, bull markets, come to an end. We just don't know when it's going to come and how severe it's going to be and how long it's going to last. But I wanted to talk about a couple of things here and a couple of scenarios that I see from the front lines, because I know you guys, my viewers, like it and that's why I call it the Inside Edge. I give you some of the stories and some of the things that I'm seeing day to day in the Vancouver real estate market. Now, sales volumes are down. I'll give you a couple of stories here. Now, townhouses, for instance, in Vancouver, I'll tell you, they're as rare as hen's teeth these days. If you've got a buyer that's looking, or someone's looking for a townhouse, it's a tall task. There is not a lot of townhouses on the market right now, and there hasn't been since last summer. When one does hit, you know, it's almost like a circus atmosphere when they run the open houses on these. So I happen to be working with a buyer right now who's looking for a townhouse. So I've been going out to some of these jamboree open houses and looking at some of these townhomes. I'll give you a story here, and it relates to another story about what we call halfers and why the Vancouver market is where it's at, because it's an equity-driven market. So I'm going to tie in a couple of things here for people. So I'm not going to give you the exact details on this, but this was a townhouse in Falls Creek, Olympic Village area. It was a 2-bedroom, 2-bath, 1,100 square feet on 2 floors. Now, when you deduct the staircase and the landings and everything, it was really about 1,000 square feet of living space. This townhome was listed at $1,298,000 for, let's call it, 1,000 square foot, 9-year-old unit. Went to the open house. It was on a Saturday and Sunday with my client, and it was a zoo. The Sunday we were there at 3 o'clock, there must have been 10, 12 parties going through it. The realtor told me it had been like that for the hour prior to that and the Saturday before. Nice unit, but I'm thinking, you know, at $1.3 million for 1,000 square feet, geez, you know, that's a tall price for that unit. I should point out as well that even though it was classified as a townhouse, which I guess it is, it did have an entrance off the street. It really isn't a true townhouse in a lot of ways. There's no front yard, no backyard, no garage attached. There really was no outdoor space at all on this, no rooftop deck. As a matter of fact, there is a unit above, a condo unit, several condo units above this ground level townhouse. Essentially what I would call this really would be a ground level condo. Really, other than the fact that it has a door to the street, that's about it. Now, I can tell you that, not surprising after seeing the open house and the interest, This unit ended up selling multiple offers for $1.4 million, $100,000 over asking for 1,000 square feet. So that's $1,400 a square foot for Falls Creek, Olympic Village, 9-year-old building. It's a tall price. I tell you that it surprised me, but then again, in this market, to let people know that think that prices are plummeting and the market's crashing. Not when you see things like that. Not when you see a townhouse selling for $1,400 a square foot. And I'll be honest, the townhouse could have used some upgrades too. It was a good unit, but could have used some freshening up as well. So a little bit of money might have to been spent. So, you know, I can tell you without knowing the buyer on this, I want to explain a phenomenon that's been going on that a lot of people forget about. And it's something that a good friend Bob Rennie, I know people sometimes don't like Bob Rennie, but he's a guy that people should sometimes listen to. And you can gather some good information from a guy like him, which I'll get to in a minute. But I don't know, I'm not privy to the buyer of this unit that would pay $1.4 million, but I've got a pretty good idea of their situation. Chances are these people are what I would call a halfer. And halfers are people that have owned in the Vancouver market, usually a detached house for the last 20, 30 years or more. They're now in their 60s. They're looking to downsize. The kids are out of the house. And they sell that house in Kerrisdale or Kitsilano or the east side, wherever, for let's say $3 million. That mortgage is long paid off. That $3 million is tax-free to them, 100%, the greatest tax shelter we've got in Canada. And they take that $3 million cash and they go out and they buy a condo or a townhouse for 1.5. They're flush with cash, and hey, they know that, gee, you know, this unit's, we're going to get into a bidding war and we know we're paying top dollar, but hey, we like the unit, we like the location, it makes sense for us, we're going to live in it part-time and head down south to Palm Springs for the winters. We're looking for something we can lock up and leave. And we don't mind paying the premium price for it. And there is a lot of that going on. There's been a number of articles in the Globe and Mail talking about this, as well as the Vancouver Sun. There's been a lot of halfers that have moved over to Victoria, Vancouver Island. They're going to Alberta. They're going to the interior, places like Kelowna. They're selling the house out here for $3 and $4 million and then buying a luxury townhouse or condo for $1 million or $1.5 million, depending on where they go. So they're flush with money, and hey, they know they're paying the premium price, but hey, so we're paying another $100,000 or $200,000. And I can tell you, the last unit that it sold in this complex, I think there's about 18 of these townhomes, even though, as I say, they have a unit living above them, was something like $1.1 million in early 2016. So that's a $300,000 premium over the last high price. You know, that's definitely a new benchmark price per square foot for that area. But these halfers have an influence on the market, and it's one of the reasons why when you hear people talk about the Vancouver market and how, based on fundamentals, this market doesn't make any sense. And I've done blogs for the last 6 years on this, and they're right. The Vancouver market, though, does not work off fundamentals, and it hasn't for over a decade. I'll never forget a Board of Trade meeting I went to and heard Bob Rennie speak. Now, I know people think Bob Rennie's got an agenda, he's a developer, of course, he's a marketer. But every year, Bob Rennie, or every year and a half, he'll do an address to the Board of Trade or to a realtor event. And you can learn a lot of things by listening to some of the tidbits Bob Rennie gives you. If anyone knows about what's going on in the Vancouver market, especially the condo market, it's him. He's privy to all the sales. He knows who's buying these one bedrooms. He knows who's buying the luxury 3-bedroom units, where the money's coming from. And 10 years ago, this was back in 2007, when we were at all-time high prices back in 2007. You know, you could buy a 1-bedroom in Yaletown for $400,000, and people thought you were crazy. And everyone was up in arms about how can this continue? Paying $400,000 for a Yaletown condo is nuts. Or paying $800,000 for a brand new 2-bedroom condo in the West End at pre-sale is crazy. It's not sustainable. Incomes haven't kept pace with the prices. And Rennie came out and said, you know, listen, the Vancouver market doesn't work off fundamentals, meaning what you earn for an income, what you can qualify for a mortgage, and what you can afford. It's an equity-driven market, and it has been for a long time. This is people that have been in the Vancouver real estate market for 15, 20, 30 years or more, and have ridden that market up and built a tremendous amount of equity. They're the halfers. They're also the ones that are helping their kids now buy these 1-bedroom and 2-bedroom units in Yaletown and the West End and Kitsilano. They're giving them $100,000 or $150,000 for the down payment. So Bob Rennie was one of the first ones that really addressed that back in 2007. Some people picked up on it, but most people just went on their merry way saying that this is a bubble, it's going to break, because the average guy is making $40,000 a year. How can they afford to buy a 1-bedroom condo in Yaletown on that salary? So this is going to continue on for you. It's something that people discount. There are a lot of halfers in there. It's an equity-driven market and will continue to be. Geez, I can tell you that you could have become a halfer 5 years ago. If you would have bought a house 5 years ago, you'd be a halfer today. So we're creating these wealth-driven buyers, equity-driven buyers. We're minting new ones all the time. You know, back 4 or 5 years ago, I could have sold someone a starter-level home in Steveston North in Richmond, 5,000 square foot lot, an 1,800 to 2,000 square foot home for about $710,000, $720,000. There were some fantastic homes. Back this past spring, those were selling at 1.4. So these people, if they would have bought 5 years ago, they'd already have $700,000 or $800,000 of equity built up in that house. So, you know, they could sell that house, come downtown and buy a 2-bedroom and pretty much pay cash for the thing if they really wanted to. So just want people to realize something, that yeah, the market here, when you just look at it strictly from fundamentals, doesn't make a lot of sense, and it hasn't for a long time. But we're an equity-based market here, and I've done so many blogs on this in the past. I'm hoping that a lot of people connect with what I'm saying. I don't sugarcoat anything. I don't have an agenda here. I'm just giving you my 30 years experience on where I see Vancouver real estate, and my philosophy's always been to buy and hold and don't try and time markets and take advantage of the principal residence exemption. It's the best thing we've got. But so many people try and outguess the markets here and think that the bubble is coming, and they strictly look at it from a numbers perspective, a fundamentals perspective. And the Vancouver market does not work that way. It's an equity-driven market. I mean, gee, think about it. To buy a typical 2-bedroom unit in Yaletown right now, maybe a 10-year-old building, 12-year-old building, you're looking at $1 million, $1.1 million. So for a typical guy to buy that based on fundamentals, you would need a $250,000 down payment to get a conventional mortgage, $250,000 down, and you would probably have to have an income of about $175,000 to $200,000 a year to support that $900,000 mortgage, maybe $150,000. How many people are in that income bracket, and how many people have got a spare $250,000 lying around for a down payment? They don't, unless you're a surgeon or an experienced lawyer. The vast majority of people don't. But yet these condos continue to sell. And the reason they are is, in many cases, the people that are buying these Yaletown condos have been in the market for many, many years. They've built up a tremendous amount of equity and are able to move up. Or they've had the bank of mom and dad helping them out with the $100,000 or $150,000 down payment to get their foot in the door with the unit. So people discount that, and you want to keep that in mind, that it is an equity-driven market. And by the way, Vancouver is not an anomaly in this in any way. There are so many other cities exactly like Vancouver in North America and in Europe and in the world that are the same way. They're an equity-driven market and don't function strictly off the fundamentals, i.e. what a person earns and what they can qualify for on a mortgage. Hope you learned something. As always, I'm Owen Bigland. Thanks for watching. I'll see you next time.